Hey everyone, I got some big news here for Marvell Technology stock investors or those that are interested in investing in Marvell Technology stock. I think this is information that all of those investors should consider. So let me jump right in. Let's take a look at these important details from Marvell Technology CFO. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, the CFO noting that revenue in the third quarter was 1.49 billion, which exceeded the midpoint of their forecast, but it was still down 8% year over year. The company's having mixed results within the business. The AI segment is thriving, booming, but the rest of the business is declining, and for now, that's offsetting the strength in AI. However, going forward, the company thinks and Wall Street expects that the boom from the AI segment is going to surpass those downtrends from the rest of the business, and the company's revenue and profit is going to expand over the next 2 to 3 years at the very least. So cash flow from operations in the third quarter came in at 503 million. That was up by 391 million from the previous quarter. That sequential growth was in terms of improvement in days sales outstanding, lower inventory, along with better profitability. Days sales outstanding, DSO, as you see on the screen here, relates to accounts receivable. Companies that owe Marvell Technology money, it had them pay them back sooner, and that's usually a good sign. Companies can generate better sales if they are to offer better credit terms. It's a form of incentive, right? Imagine if I was selling you a product for $1,000 and you had to pay me right now. You might say, well, no, I don't want that product because I don't have 1,000 to pay you right now, or I may not have 1,000 coming to me in the next week or 2 or 3. But if I was to tell you I have a product for sale and I'm giving it to you for $1,000, and I'm also giving you 6 months to pay me back or 3 months to pay me back, now you're a little more interested because you've got more wiggle room, more time to pay me back. And so that's where companies sometimes change those terms to incentivize buyers, to incentivize sales. And when you see a company like what Marvell did here, reduced days sales outstanding, that means it could have made more sales if it didn't reduce that, if it was more friendly in terms of credit offering. So now I'm not suggesting they tightened credit terms. I'm just giving you an overall example of how days sales outstanding works to either increase or decrease sales for companies in the world of business. So lower inventory along with better profitability. Lower inventory is selling your existing inventory and not replacing it by as much. So if you had 100 units, you sold all 100 units and you only made 80 more. So you didn't replenish all your inventory. You were willing to have a lower inventory stock. Companies usually do this when they expect fewer sales going forward. And you notice Marvell Technology revenue declining 8% year over year. So while they're on the downtrend, you do want to reduce inventory. This is a prudent move by management in balancing inventory with the current declining state in revenue. Now, hopefully within that inventory, they're emphasizing and prioritizing the AI related inventory because that part of the business is booming, and it's reasonable to assume they are. Management are intelligent. They realize what part of their business needs the more inventory, and they can balance that given enough lead time. So the company returned 52 million to shareholders through cash dividends, and they repurchased 50 million of their stock during the third quarter. Total debt was 4.19 billion. So in relation to the dividends they pay and the stock repurchase, they have a lot of debt. However, in relation to how much cash they generated, 503 million in the latest quarter, their total debt is manageable. And management even said that they were able to refinance existing debt at lower interest rates in the most recent quarter. So their debt is manageable for now. However, if their business were to continue to decline, it could be an issue, but that's not the state the business is in. The business is in a mixed reality where part of it is declining, the rest of it is growing, and by next year, they expect the business overall, driven by the boom in AI, to be growing both the top line and the bottom line. As of the end of the third quarter, their cash and equivalents were 726 million, which was up by $202 million from the previous quarter. So the company is forecasting GAAP gross profit to be in the range of 48.2% to 50.7%, or roughly 49% at the midpoint, a solid gross profit margin for Marvell Technology. Moving on, the forecast is for this large sequential improvement is driven by expectations of a significantly stronger product mix and their ongoing cost optimization activities. So earlier in its fiscal 2024, Marvell Technology introduced cost-cutting regimes, like many other tech companies cutting costs, and they expect that to help improve gross profit margin. Further, their product mix, more AI related products, which has better pricing power, better profit margins, are going to result in better profit margins for Marvell Technology overall, as that segment grows to become a larger share of the business overall. So good news for Marvell Technology investors looking for profitability to improve going forward. So the company's level of operating expenses reflects the completion of the cost reduction plan they communicated in their first quarter of this year. So first quarter of the 2024 fiscal year for Marvell Technology, which was in the calendar year 2023, they implemented these cost-cutting plans and it lowered their total cost, their operating costs, and they expect that now as they go through to next year over year, they're going to have lower cost, and that's going to improve profitability, profit margins, even as revenue remains flat for at least another quarter. And then as revenue starts to grow, that's when really its cost-cutting plans are going to start to show, and its profit and profit margins are going to expand. So the company is guiding to GAAP earnings per diluted share in the range of a loss of 8 cents to a gain of 2 cents per share, so anywhere in that range. GAAP stands for Generally Accepted Accounting Principles without adjustments. Many companies report or guide to adjusted GAAP or adjusted this or adjusted that. That's less informative than when a company tells you what GAAP numbers they're going to deliver, because that's the Generally Accepted Accounting Principles. That's the format that's accepted generally as the principal format. Don't make adjustments to that format, because investors are going to see through that. They're going to realize you're making adjustments to make things look more favorable, right? Companies don't adjust the numbers to make things look less favorable. They rarely do that. Sometimes you'll see companies do that. Companies that are very sure of themselves and confident and trust that investors won't punish them for being transparent in revealing these numbers, they'll reveal some numbers. They'll adjust some numbers that make them look less attractive. But overall, in the grand scheme of things, those adjustments are rare. Most often, companies will adjust their numbers to make them look better. And they'll say, well, don't count this cost and don't count that cost and don't count this. If we take all of that out, then we were profitable. And we were really proud of ourselves for being profitable, and they'll go on, right? So I tend to give them less weight and less credit when they report adjusted profits versus when they report GAAP profitability. Just a little explanation of what GAAP and why GAAP is better than when companies report adjusted. So overall, Marvell Technology, mixed results, right? One part of their business not doing well, the other part growing, and going forward, that's going to lead to better profitability for Marvell Technology. Just a reminder, I do have Marvell Technology stock rated as a buy. I have explanations on that in other videos on Marvell Technology. You can find them on my channel. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.